Hi guys, welcome to Section D Cost Management Lectures of CMA US Part 1 video series. So in this particular video, we are going to look at what are the components of Section D, which is cost management, and that comprises of 15% of your exam score. So that would be 500 marks into 15 percentage, which is 75 marks. Out of your total 500 marks, you get 75 from this particular area, cost and cost management. So there are total 5 topics in this particular section D. What are the 5 elements or 5 topics? So the first one is measurement concepts. So measurement concepts is basically where we will talk about how to calculate cost. Okay, so first let's understand what is this topic all about. See, cost management. Suppose imagine you started a particular restaurant, okay, a food joint or whatever you want to call it. So in that restaurant, if you want to know about the pricing, let's say in your restaurant you are selling something like chow mein noodles or else ramen or else, let's say, Hyderabadi's favorites biryani. So should you price this biryani at rupees 300, or should we price this at rupees 180? Should we price this at rupees 250? These are the 3 options that are available to us. If you want to make it more affordable and cheap, you have to go with 180. If you want to make it more pricey and premium, you can go with 300, 350. If you want to keep it on an average level, you can price it at 250. So how do I determine whether it is 180, 250 or 300, sir? So that would depend upon your multiple reasons. First one could be, what is your cost of preparing this particular biryani? Second one, which type of restaurant are you running? Are you running an economical restaurant, or are you running a pricey restaurant, or are you running a a restaurant with a nice ambience and smooth music in the background with good lighting, candle lights, etc.? Are you going into the pricey premium section of it, or are you in the economical section of it? Based on that also you have to fix your price. And third one is your competitors. So based on your competition also, you will have to consider your price level. If your competitor is doing it for 200, and if you want to get more demand, then you'll have to sell it for less than 200. Maybe in that case you will go with 180. So it depends upon your competitors as well. Now comes the question, but sir, in any of the reason, whatever may be the reason, if I price my product less than my cost of making is, let's say, 160 rupees. Until and unless I make some profit out of this, there is no reason in running a business. So maybe I cannot price it less than 180. Sir, why 160? If 160 is cost, why 180, sir? Because other overheads also will be there, electricity bill, etc., etc., also will be there. We need to recollect that also, otherwise we'll get lost. So your price cannot be determined unless you calculate the cost of the product. Now comes the bigger question, what is cost of the product? So that would include your raw material, labor, your production overheads, manufacturing expenses, non-manufacturing expenses, etc., etc., etc. There are n number of factors to consider. So in this n number of factors to consider, there are different methods of calculating the cost per unit. First, in the measurement concepts, measurement of what? Measurement of cost per unit. So in the first part, we'll look at what are the different types of cost behaviors: variable cost, fixed cost, step fixed cost, etc., etc. How does cost behave basically? Then what are the different objects within the cost? How does the cost flow from, let's say, cost of production to cost of goods available for sale, cost of goods available for sale to cost of goods sold? So again, when we go into the chapter, we'll look into the more details of it, but flow of cost. Then what are manufacturing cost? How are they driven? Matlab, electricity bill is there, for example. So electricity bill will be driven by the number of units of electricity consumed. Suppose if I'm traveling from location A to location B, the cost of fuel would depend upon the distance and the mileage of the car. right? So cost driver is basically which factor drives the cost. Based on what is the cost calculator or determined, that is called cost driver. So there will be a predetermined overhead rate, let's say per kilometer 8 rupees. So how do you know 8 rupees per kilometer, sir? That is a overhead rate based upon an estimate or an average historical. Then we'll talk about actual costs, normal costs, standard costs. Again, if I keep talking about every point here in the introduction lecture, this itself will cover the entire syllabus. So actual costs, normal costs, and standard cost. What is the difference between all these three? We'll discuss in the lectures. Then fixed cost versus variable cost versus semi-fixed or semi-variable costs. So then you have these three are basically your costing methods. So there is variable costing, absorption costing, and activity based costing. So these three are costing methods that we follow. So usually the most easiest one would be variable costing and the most difficult one would be activity based costing. So students face most of the issues understanding the difference between these three. So I'll try to take as much time as possible and explain it more clearly in the series of lectures. And then you'll also have something called as joint and byproduct costing. So joint products and co-products and byproducts, I guess you all have a basic idea about it. The classic example we take is sugarcane. So when sugarcane is processed, you'll get two elements. One is sugar, which is the end product, but apart from this, you also get something called as baggage. I don't know if the name is right or not. I don't exactly remember the spelling of it, but anyways, so that's a byproduct of it. Or if I give you a better example, I can take when crude oil is processed. So you get petrol. I guess it's bagasse. Okay, fine, whatever. Petrol, then you have diesel, then you have kerosene, then you have gasoline. I'm not sure gasoline is within the petroleum crude oil refinement process or not, but I remember it. Anyways, okay. This is not physics lecture anyways. So you have petrol, diesel, kerosene, tar, which is used for laying down black roads, and then you have candle wax. So these are all these are all the joint products that are produced. Out of this joint products, you might have co-products and byproducts. Co-products are the important ones like petrol, kerosene, diesel might be considered as co-products. Byproducts are the ones with lesser value, maybe something like tar, candle wax, etc., might be considered as byproducts. Again, we'll discuss the details once we go into the topic. All right, so that is your first topic in section D, cost management, which is measurement concepts, where we discuss about various methods that we use to measure the cost per unit. Then you have two costing systems that we discuss in detail. One is process costing and the other one is job order costing. Job order costing and process costing. Just to give you an idea, imagine you are doing a furniture business. So in this furniture business, a customer came to you, Mr. X, and this customer ordered a customized interior order for you, like one TV unit, one six-seater sofa set, eight-seater dining table, whatever XYZ factors that he wanted, items that he wanted. He gave you a list of that and he asked you to create that as a customized product which you cannot sell to anybody else. So this will be considered as a separate job. It's a new job for us. So whatever cost we incur for that particular job, raw material, labor, transportation, any kind of spare parts, etc., all of these parts will be included in the cost of that particular order. That is called job order costing. Again, just basics I am covering here. Then process costing. How much is each process costing you in your business? Let's say you are manufacturing some food item. So first there will be procurement of raw material, then cleaning of the raw material might be there might be some processing of the raw material, then the actual production process, then there might be post production cooling off or something like that. These are all what, sir? These are all different processes involved in producing the item. So each process, how much is it costing? That is what is calculated under process costing. All right. And next one, you have life cycle costing. Throughout the life cycle of a product, research and development, then launch phase, then after that launch phase you have growth phase, After growth phase, you have maturity phase on the top, and after the maturity of the product is done, then there will be the decline phase. So in each of these phases, there will be different costs involved in the production process. So what are the costs involved, and what is the life cycle cost throughout the life cycle of the product? What is the total cost? So that is calculated, and based on that we calculate cost per unit. That is called life cycle costing. And then you have something called backflush accounting, which is a interesting concept, which is very rarely tested. Once in 10 attempts they'll test backflush accounting. So we'll just discuss the definition of that in your syllabus. Do not worry now. Then we talk about overhead costs. Overheads as in any other costs other than your material and labor. So for example, transportation is there, electricity bill is there, telephone bill is there, internet bill is there, and packing and other material charges are there. So delivery charges are there. So all of these are what, sir? These are all combinedly called as overhead. Rent, okay, these are all combinedly called as overheads. So within this overheads, we are going to discuss what are the different types of overheads: fixed overheads and variable overheads, which one are fixed and which one are variable, changing. Then we'll talk about some overheads which are plant wide, matlab for the complete plant as in your entire factory building. Then some overheads are depending upon the department. Suppose advertisement expenses, that is regarding the marketing department. Suppose there is a payroll cost, that is HR department, right? Like that, department wise also you'll have some overheads. Then we are going to talk about determination of allocation base in case of ABC. So for absorption costing, okay, see, absorption full costing, how is the overhead rate determined? Sir, this is a small problematic part with the CMS syllabus order. I would rather first want to deal this topic before going into this topic. So in the series of videos also, first we'll cover the determination of allocation base. So without knowing the base allocation, how is that base calculated, or you can call it as overhead absorption rate, OAR. So without knowing that, you will not be able to do absorption costing. So first we will deal this, and then we will go back to absorption costing. All right, chalo. Anyways, next, allocation of service department costs. So service departments as in you might have HR department. Sir, this HR department does not produce any goods or anything like that. They are not involved in sales, marketing or stuff like that. That is payroll, right? So this is a service department. This serves all other departments in your organization. So what about the costs incurred by such kind of departments? So we use some techniques to include this service department cost in the other departments, and we allocate that on a common base. We'll talk more about that in the lecture series. Do not worry now. So that is costing systems and overhead costs. And then after that, we have two important topics here. One is called supply chain management, and the other one is called BPI, business process improvements. Sir, understand this, supply chain management, you have separate bachelor's degree specialization on supply chain management. It is BCom with supply chain. Specialization is supply chain itself. Like you have BCom accounts, BCom computers, like that they have something called BCom SCM, supply chain management. So they learn supply chain for 3 years of their graduation. So you understand how huge that particular topic is all about. Sir, then how do they expect, how do IMA and CMA expect us to learn within one section, one topic in CMA part 1? So you are not going to go into the details of it, complete details of it. You are just going to know the overview concept of it. So within supply chain management, you are going to learn what are lean resources, what is value chain analysis, whether we should produce a product in-house or whether we should go for outsourcing of product like Apple does with Samsung. Sir, all your Apple iPhones, iPads, the screen which you use, the screen is actually produced by Samsung. Many people think Samsung and Apple are competitors. When it comes to the mobile phone segment, Apple and Samsung are competitors. But when it comes to the screen, Samsung is the supplier for Apple. All right, so there are so many things which we do not actually know in real life. I'll try to take so many of these examples in the lecture series, do not worry. So whether we should produce in-house or whether we should outsource it to someone else. Similarly, we have some very important concepts regarding the value addition, which is MRP, ERP, material resource planning, enterprise resource planning, just in time JIT, Lean Sigma, TQM, total quality management. So each of these strategies in themselves are huge courses. I'm not even kidding you. If I talk about Lean Six Sigma, this Lean Six Sigma itself has, if my memory is serving me right, there is this white belt, then after that there is yellow belt, then after that there is green belt, then after that there is black belt. So there are 4 levels in Six Sigma itself. Luckily for me, I completed white belt and yellow belt, and currently at the time of recording this lecture I'm doing Six Sigma green belt. So anyways, that's a story for a different day. This is what, sir, this is just about Six Sigma. Like that, you have MRP, ERP, just in time, TQM. All these topics are extra, but you will have only the basics of it. Do not worry, you are not expected to learn the entire strategy as such, so do not worry much about it. All right. Okay, next after that you have activity based management. So here we discussed activity based costing. So once you follow activity based costing using the outputs of ABC, how do you manage your business? That is covered in ABM, activity based management. Then you have something called theory of constraints. So constraints are basically which are less available, or limited stock is available, or limited quantity is available, limited resources are available. When you have limited resources in your organization, how do you deal to get the maximum productivity and maximum profits? That is covered in the concept of theory of constraints. Same thing, capacity management. How do you manage the maximum capacities, and how do you analyze which product should be produced, which quantity should be produced, and all that stuff. Then after that, if we move further, we have some other concepts here, which is in the business process improvement. So how do we analyze the value chain? What are the different value added concepts? I guess some topics are actually uh, copied over from supply chain management. I'll rectify that, do not worry. These two are within this concept itself, so that's fine. And here if you see, what is business process analysis, what is the redesigning of the existing business process, how do we standardize the processes in our organization, benchmarking, setting a goal and target and then comparing actuals with that benchmark. Again, activity based management is duplicated from here. Then continuous improvement concepts. How do we continuously improve the business processes? What are best practices and how do we analyze them? What is the cost of quality and its analysis? So in order to maintain quality in an organization, okay, there are something called as conformance costs and non-conformance cost. So what are conformance costs, sir? So basically, if you want to make sure your product is qualitative, then you will have to make sure there is proper quality checks, QC. You might have seen when you purchase one product, at the bottom there will be one small sticker, QC passed. Means quality check is passed. That means before selling the product only they have done some quality checks, and after that only they sold. That is called conformance cost. So you purchased a product, quality is very bad, so you had to return it back. So when you return it back, that will be warranties, guarantees, replacement, etc., etc. So that is an extra cost for the company. That cost is called as non-conformance costs. So again, we'll discuss in detail when we move into the chapter, but yeah, we have this 5 topics in your section D, which is cost management. I hope you got a very clear overview about what is this concept and what are the expectations from this particular section of your syllabus. So I'll see you in the lecture soon. Until then, keep smiling, take care, Radhe Radhe.